Indian equities sulk as global markets react to Trump's Greenland tariff threats. Realty and energy are the big drags, while capital goods and power stocks eke out gains.
Reliance Industries posts its highest operating profits in 7 quarters, with O2C and Jio delivering strong performance even as oil and gas exhibits weakness. The consumer business is spun off from a retail even as work on Jio's IPO progresses. Analysts maintain an upbeat stance on the stock.
Tech Mahindra gains after it beats street estimates on most counts, while Wipro takes a drubbing as it falls short on growth expectations, even as profitability shows a marked improvement.
Bharat Coking Coal makes a stellar debut on the bourses, with the stock listing at an over 95% premium to its offer price of 23 rupees a share. The country's largest coking coal player has given a strong guidance for FY27.
And the stock of Interglobe Aviation climbs after DGCA slaps a small fine, calls for a bank guarantee, cautions the CEO and issues warnings to key executives. The focus now shifts to reform measures and normalization of schedules. Hello and welcome to Halftime Report live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me Sonal Putra and Vinny Motiwala. Well, it is turning out to be a day where we've started on a defensive footing, you'd have to say, for the market. So currently the Nifty is reeling under pressure because of the global cues on one end, where we do have the uncertainty with regards to what is taking place with Greenland and the intentions that Trump has there. But separately, we do have the earnings which have weighed on sentiment at this point in time as well. Yes, a few positives coming in from the likes of ICICI Bank with regards to the extension of Sandeep Bakshi, but overall the profit decline has probably stirred the markets on the negative side. We do have HDFC Bank also, which was marginally lower along with Wipro and Reliance. But on the upside, we do have a couple of stocks which are managing to hold up with the likes of TechM. But nonetheless, BHEL also currently down around 1.5%, just came out with numbers maybe around 30 to 40 minutes ago. Lot of results to watch out for today. We have LTI, Mindtree from the IT space, Hindustan Zinc, which would be important considering the stock price run-up that we've seen, CEAT, Havells, Oberoi Realty, PNB, a whole host of interesting numbers from different sectors to give you a sense in terms of what is taking place there. Hi, Gav.
Hey, Ekta. Hey, Vinny. It's going to be a busy day and a busy week as well. We are getting so much commentary coming in from the World Economic Forum in Davos as well. For now, it's the metals index that continues to be on the front foot. Nifty has again seen some fall from the highs of the day, so we continue to track that. For now, most of the indices are in the red as we speak. It's just the FMCG, metals and PSU banking index which is at least attempting to be in the green as we speak. Realty continues to be under pressure. That's down another 2%, and now this index is down 21% from its 52-week high. So we'll watch out for management commentaries and the outlook going forward. But for now, majority of the market reeling with some red today, Vinny.
Absolutely. Majority of the market is reeling with some red today. And, what we'll keep an eye out on is BHEL also. It just reported its numbers just a short while ago. Overall, it seems like an okay set of numbers in terms of the performance versus what the street was expecting. Standalone basis, however, there was a bit of a miss. Consolidated basis, it was fine. Revenues have seen a good growth at this time. Operating margins, some sectors have done well, while overall, we're seeing a bit of muted performance that came in from the power segment, especially in terms of the EBIT margin. So that is something that we'll watch out for. But yes, BHEL, we have some commentary that is coming down there as well for you all on the screens. So keep an eye out on that. As of now, it's trading in the red. But let's move on, and what we have in store for you all on the show today, we will talk about the banking stocks that are reacting to their Q3 earnings. We'll also put the spotlight on Q3 earnings of Rossari Biotech with their management. And later on in the show, we will discuss the capital goods sector and furthermore what to expect with PL's Amit Anwani, who will bring a special discussion on that front as well. Apart from that, we'll discuss on the sidelines of Davos as well with the management of Suzlon. Stay tuned in for that. Okay, now let's move on and bring in the first element for the show today, that is about the bank earnings. Gaurav is here to take us through the Q3 bank earnings. HDFC Bank, ICICI Bank, a whole host of numbers that came in over the weekend, Gaurav. But how were they looking like?
Well, as weekend was actually busy for me because all the heavyweight banks like HDFC and ICICI came with the results. And throughout the result, one thing was consistent is that some weakness was there in the result. So first, let's talk about HDFC Bank. When we look at HDFC Bank, on the positive side, we saw net interest margins that increased almost by 11 basis points, higher than the street's expectation. At the same time, credit costs that declined to 41 basis points, and the reason being that there was 140 crores worth of write back in the contingency provisions. But on the flip side, what was negative is that Mr. Bhavesh Zaveri, who is the executive director, has requested not to seek reappointment. That is number one. And second is that the bank reported 500 crores worth of additional provisions due to regulatory requirements. And this was because of the non-compliance with their agri PSL portfolio. Now, bank said that there was no need for any additional one-off provision. But again, at the same time, we are seeing some kind of weakness in the stock. Second, let's talk about ICICI Bank. Now, the biggest disappointment came in terms of credit cost here. And the reason being that here as well, we saw on the back of the RBI's request, bank created additional provision worth of 1,283 crores because they also had some problem with the classification of agri PSL portfolio. Now, that led to credit costs increasing to around 74 basis point versus street's expectation of 50 basis point. Other than that, because of this higher credit cost, we saw profit decline almost by 4% on a year-on-year basis for the bank. On the positive side, we saw a reappointment of Mr. Sandeep Bakshi, who is the MD and CEO for the next 2 years. But again, if you look at the stock performance, management and overall commentaries, it looks like street is not focusing on the positives. They are actually biased more towards the negative in terms of credit cost. Third, let's talk about RBL Bank. Now, we are seeing one of the biggest falls in RBL banks today. And the reason being that if you look at the positive side, net interest income that increased and net interest margins improved almost by 12 basis points. But on the negative side, we saw credit cost increasing once again for the bank. And this time it was because of the credit card segment. Now, credit cost increased almost by 40 basis points, and management said that over the next 2 to 3 years, they will see some stress in the credit card segment. That is the reason why profit, that was also below street's expectation. And as a result, we saw some fall in the share price. For Yes Bank, let's look at some of the positives first. Now, asset quality has been good for Yes Bank in this quarter because slippages have come down. Second is that if you look at net interest margins, they improved almost by 10 basis points. But on the flip side, what was negative is that if you look at ROAs, now the expansion in ROAs, that was specifically because of the 555 crores of the gains that they reported in the security receipt sale. If we exclude that, ROAs still come between 0.5 to 0.6%, which will be stable on a quarter-on-quarter basis. Now, management did say that in FY27, they will bring ROAs towards 0.9%. But second thing that was disappointment was that if you look at the growth comments from the management, they said that they will be clocking 8% growth in terms of loan book for FY26. Remember, in the last quarter, management had called out for double-digit growth, somewhere in the tune of 10% for FY26. So that is something which was another disappointment throughout the results. And lastly, let's also not forget about IDBI Bank. If you look at ROAs, they have declined, and at the same time, net interest margins, they have declined almost by 19 basis points for the bank. And as a result, we are seeing some pressure in this bank as well. So all in all, throughout the result, if we look at all the banks who have reported, except for UCO Bank, all the banks are currently under pressure.
Yes, big pressure there. Thank you so much, Gaurav, for summarizing all these major bank results that came over the weekend. That's all about the banking space, but let's talk about Rossari Biotech, the first management on the show. The company reported a muted growth when it comes to their profits. They said that there's some demand concerns in their domestic market as well. Joining us now to talk more about the earnings and the outlook going forward is Sunil Chari, the co-founder and managing director at the company. Mr. Chari, good afternoon. Thank you so much for joining in. In your commentary, you spoke about weakness in the domestic environment. Can you give us a sense of what the volume growth was? Because ground surveys also suggesting that now consumer companies or other companies are moving from oleochemicals to crude-based chemicals. Did that not benefit you in the domestic market? Can you give us a sense of demand concerns and the pricing environment?
Good morning. We had a good quarter as far as, in spite of all the volatility and uncertainty in the markets. This is the quarter 3 is normally the weakest quarter in our year, and you should see at the year-on-year the growth which is there. We had October, which was a little slow in the domestic market, but December the markets have come back. In fact, we don't see any change too much in the shift from oleo to the crude base. We have a portfolio based on oleo and also on crude. So we don't see much change in the demand from the customers. Products where oleo can be used there are some products where we cannot change to crude base, and hence the oleo base will continue. For us, it doesn't matter whether it's oleo or crude because a surfactant is a surfactant and it will do. The textile and AHN also have done well. Exports are strong at nearly 27-28% of our sales and inching towards the 30% growth mark. And also we have been able to now get approval from the board for greenfield facilities in Saudi Arabia.
Okay. Mr. Sunil, if you could just narrow down a little more on exports. You touched upon it briefly. You said it's almost 30% of your business now?
Yes, 27 to 28% and inching towards the 30%. It's every quarter since the last, 6 quarters, exports have been continuing to grow.
Yes, but could you just give us more details in terms of how much growth the exports did record this quarter, and where exactly are you seeing it come through from, and what might your guidance be for the remaining part of the fiscal in terms of exports?
So this quarter also we are expecting to be in the range of 27-28% of our sales to be exports. But then in the next year, we are expecting that we should be 30% of our sales as exports.
Okay, and how is the segment doing in terms of performance?
The HPPC is still 77% of our sale. HPPC is our home personal care and performance chemical segment, which is holding strong. And we see in the next 5 years in our internal budget it to rise to nearly 90% the HPPC segment. And this is on growth of where we are expecting nearly double growth in sales and EBITDA in the next 4 years. And in that context, the percentage of HPPC is continuously growing.
Okay. Hi, sir. Good afternoon. Just wanted to know also in terms of your INSEE cleaning as well as the B2C business, right? Still reporting a bit of a loss there. So any strategy in terms of that? What should we watch out for going forward?
The board has shared the views that we should look at exiting the consumer businesses. So this is something which we plan to do, make steps in this quarter.
Mr. Chari, one on this business that Winnie just spoke to you about, by when will you be exiting the consumer business? And second, on the domestic business itself, what was the volume growth or decline this quarter? When do you expect to see complete recovery come by? Because while export, of course, is 30%, 70% is still domestic, right? So I'm trying to understand what the demand trends are here.
So, as I said, October was very weak for us in the domestic. I think it was primarily because the Diwali month is always slow and we have a lot of holidays with our consumers. December has been very strong. So I think for us, this quarter, we see the domestic demand picking up again.
You taken any price cuts to retain the market share? And there was some partial commissioning that came by in second quarter as well. So in third quarter, what was the capacity utilization there? How much did it contribute to revenues?
So we have continuously, increasing utilization of the capacities. As you know, our ethoxylation capacity is at 100% usage. We have no capacity built left in ethoxylation. Now we have a new MDA plant, which we should start seeing results, full results where we are expecting 70-80% capacity utilization from April onwards. This is where we have already got a lot of approvals for our methyl diethanolamine plant. This is the new capex which we did. And in this quarter also, we should have, commissioning of our animal nutrition trace mineral plant, which is a vitamin premix plant, and also our fermentation facilities for manufacture of biosurfactant.
Okay. All right, Mr. Chari, always a pleasure speaking with you. Have a lot more questions, but out of time, but we'll pick it up next time. Thank you so much for joining us with the outlook on the business going forward. With that, we'll do one thing. We'll slip into a short break. When we come back, Winnie will focus on capital goods sector in our special QSQT segment.
Welcome back. Well, for the markets, it's under pressure at this point in time. But just want to point out one particular stock, Sun Pharma, where we have CNBC Awaz has also reported that Sun is evaluating an acquisition of Organon, which is worth around $10 billion in terms of a total size, inclusive of the debt. But as you can see, the stock, which was under pressure at the start of trade, has now turned into the green. So it's up around 0.6%, holding up. Maybe the street is quite sanguine about this particular acquisition. But let's see, considering it's a large size, but maybe the street is confident of Sun Pharma's capabilities at this point in time. But nonetheless, let's tell you on our What's Trending segment today, the focus is on capital goods. In the spotlight after BHEL's numbers, which just came out, the company reported its earnings just about an hour ago, and the stock is under pressure post its results as it was a top-down miss. Joining us now is Vinny, who will take us through what to expect from capital good companies this quarter in our QSQT segment. And shortly, we'll quiz Amit Anwani of PL on his view on BHEL and the capital goods space. Let's go across to Vinny. Vinny, over to you.
Hi. So firstly, overall, in terms of Q3 expectations this time, it is expected to be a better quarter versus Q2 FY26 for most of these capital good companies. And obviously, what is going to be leading the growth is the post-monsoon season recovery, strong order inflows, execution on high voltage power OEMs as well. The rest of industrial plays will be a bit of a mixed bag result. Now, robust order book is what we'll start with. We start seeing that conversion coming in into higher revenues and selective margin expansions for some of the companies. Talking about order inflows, they are expected to drive this quarter's main narrative. Now, when you talk about GE Vernova T&D, they're expected to see a strong order inflow, mainly obviously aided by that big prestigious order that they got from Khandwa, which was to South Olpad. Now, this was a very big order. So, obviously, order inflow for GE Vernova is seeing a sharp jump up. With Hitachi Energy also, the order inflow is expected to see an 84% decline this time. And this is mainly due to the HVDC order that came in last quarter. So, last base was higher. So, that's why Hitachi Energy is seeing a decline. On the other hand, ABB India is expected to see a steady order inflow of 26%, followed by KC International as well as Siemens. Now, the important drivers of capital goods companies, what is it going to be in Q3 FY26? Healthy execution momentum across the T&D sector and play for project companies and product companies that will be leading the growth. Other than that, execution is expected to be robust given the outstanding order books that these companies have. Also, given the healthy industrial demand and robust execution, they expect mid-teens revenue growth for the sector. Now, let's talk about particular T&D related product companies that are there. They're expected to see better growth versus other segments. 18% overall growth as one could see. GE Vernova T&D, good growth over there. Siemens Energy and Hitachi Energy is expected to 17% growth. Now, other than that, when you look at it, what is leading the growth for these T&D players is going to be the execution parts and the domestic business that has been doing well for these companies. Moving on, industrial machinery part. What is expected over there? Industrial machinery companies, revenue growth is expected to remain moderate, 7 to 8% overall growth, largely mainly impacted by the sluggishness that one has seen coming in for the export market, and likely delay in dispatches amid some tariff-related uncertainty is a concern. For project companies, revenue is expected to see around 17% growth this time overall. On an average basis, that we're seeing healthy execution, strong order book, strong traction in the international market for these project companies will lead the growth there. Now, let's talk about margins. T&D EBITDA margins are likely to see an improvement on a year-on-year basis. GE Vernova, we are estimating an EBITDA margin of around 22%, which is implying a 530 basis point increase on a year-on-year basis in terms of margins. Healthier gross margins is also what we're expecting. Operating leverage is something that will lead the growth there. Industrial machinery side companies, EBITDA margins are likely to improve owing to better operating leverage. We expect a 390 basis point YOY decline in ABB specifically. And EBITDA margins are lower. Pricing power for ABB is impacting their margins. Further, in Q3 FY26, rupee depreciation was there versus USD. So that could impact ABB's margins. So sharp impact coming in and decline coming in for ABB margins. Siemens, according to CNBC poll, indication is coming in around 40 basis point expansion there. Keep an eye out on that. While gross margins may be contraction, but operating leverage is something that will offset that for the company. Cummins, Thermax, maintaining the steady margin that we're seeing and slight improvement on a year-on-year basis. Project companies' EBITDA margins are likely to see an expansion led by better operating leverage and favorable mix. Now, key commentary or key highlights that triggers that we'll watch out for from this sector include improvement in execution pace, pickup in private capex, is that there, demand for power T&D, nuclear data centers, how is that shaping up, impact of geopolitical tensions on the export business, while in terms of valuations, when you're looking at it, valuations seem like a bit muted versus the average. So we will watch out for that. Capex spend is there, something that is continuing. So keep an eye out on all the valuations for the companies as well. But BHEL today, after the numbers, we're seeing a bit of a decline.
Okay, all right. Take that.
Sonal, just before that, I just want to point out Torrent Pharma, which is in focus. There's an important flash which has come in, where I'm assuming it's the Indian government which has accepted the company's phase 3 clinical trial study report on semaglutide, and what they've said is that they've recommended permission to manufacture and market semaglutide tablets. Remember, that is basically the generic version of Wegovy and Ozempic, which is Novo Nordisk's blockbuster drug, and that is going off patent in March anyway in India. But the committee has recommended permission to manufacture and market the semaglutide tablets. So one will need to see when exactly they can probably start manufacturing it, or start manufacturing it for the Indian market without any kind of patent issue. So that'll be interesting to see. As you can see, the stock is up around 1.8%. But it's important to remember, March onwards, there'll anyway be a lot of competition when it comes to semaglutide. They might just have some kind of runway for growth, but you also have a lot of competition coming in from big drugs such as Mounjaro.
We've been discussing, you've been explaining all of it to us since the word goes, so keep an eye out on this one. But let's get back to capital goods to talk more about what to expect in the sector, and most importantly, BHEL just reported numbers. We have with us Amit Anwani, research analyst at PL Capital. Amit, good afternoon. Thank you so much for joining in. Before I speak to you about the entire sector, and it has been in focus, right, because of whatever's happening with China, the imports, exports, and there's been a lot of source-based news that has come by there as well, and we've seen a sharp decline in stocks overall. But BHEL in particular, them talking about the capex plans in Varanasi that they have pushed because they need more cash. They're still talking about the impact of labor code. What did you make of the numbers? You have a hold rating right now. Have you been able to see the internals and talk about it more?
So thank you so much for having me. So I think, first of all, BHEL has been execution-focused company from past 2-3 quarters. There has been a lot of order intake, which they have already won upward of more than 1,50,000 crore in past 24 months. And even H1 intake, including one state order, which they won upward of 15,000. I think H1 intake was again more than 32,000. So I think the more granulated focus was there on the execution. Current quarter, as I can see, versus our estimate for PET of 415, I think the stock is slightly lower than the estimate, and even for overall street estimates, it is much lower. I think the focal point also, as you already talked about, shifting of the production facility, is that in terms of capital allocation and execution, we have been seeing this company having substantial contract assets and facing issues with respect to execution delays in the past. And I think the gradual recovery was expected. So still, for me, the numbers should be better versus what they have been delivering, considering the very strong order book, which is not coming. So for me, the focus definitely is execution, and we have the hold rating. For me, the re-rating point would be when there's a very strong execution coming in, which will provide a leverage also on the margins.
All right, Amit, we have to let you go on that note. Thanks very much for joining in and giving us that brief call in terms of BHEL and the capital goods space. We now need to cut across to Shireen from the World Economic Forum, speaking to Suzlon's management. Shireen, over to you.
Hello and welcome to our continuing coverage here from Davos 2026. It's a very cold morning. The sun is just about rising here. It's still very early in the morning. And while the headlines here at Davos 2026 at the World Economic Forum are dominated by what President Trump has done and is likely to do, there are, of course, serious other complex issues that one has to deal with. The energy trilemma is one of them. Clean, affordable and secure sources of energy. That is what the world is also grappling with as we enter a new era of geo-economic confrontation. Joining us now to talk about the plan and the road ahead for Suzlon in its 31st year is Girish Tanti. Mr. Tanti, always a pleasure. Many thanks for joining us here in Davos. As I said, a lot of the conversation is around the energy transition, continues to be around that, but also around AI and the kind of power demand that electrification as well as AI are going to lead to.
Correct. Yeah, I think if you see just the year that we finished, 25, almost 92% of new energy that got installed globally has all come from renewable energy. In India too, around 80% of what we constructed this year in the country has come from renewable energy. As we look ahead also, I think, with the electrification of the entire value chain, the EVs as well as the AI, for the first time we are seeing globally huge pickup in the electricity demand worldwide. And I think within that today, both for wind and solar and battery systems now, for the first time we are seeing a convergence of all three technologies where, the cost of energy is amongst the cheapest that you can get today. So I think with that, the adoption of renewables is expected to significantly pace up from here.
Talking about significantly pacing up the move towards renewable energy and to talk about specific to what's happening in India, the 10 gigawatt annual target, how close are we now to that? We're about 6 gigawatts today, but when do we get to 10? How confident do you feel about that?
Yeah, so today if you see, as a country, we have just crossed 54 gigawatts. That's the halfway mark to 100 gigawatts by 2030, the first review period that we have set for ourselves and the targets that PM Modi has set for the country. I think with the 6 gigawatts crossed this year and the manufacturing capacity strength almost 20 gigawatts annually that we have with good export demand, we are expecting that in next 2 years we should cross the 10 gigawatt mark. And by 2030, we should be closer to about 13 to 15 gigawatts.
Okay, you talked about the export opportunity, so let me double down on that. We're dealing with a fairly volatile and uncertain world. I know you're yet to finalize your export plan, but lay out for us what we can now expect from here on as far as your export strategy is concerned.
Yeah, so today if you see, effectively with the electrification and the demand that we are seeing across the world, almost all nations, there's a good portion of, green energy adoption that's happening. So we've kind of looked at the key markets where we believe that in today's new organized world of multipolarity that we have, but still we see that, I think there are excellent opportunities for renewable energy and wind energy in specific. So we've targeted Europe as one of the key markets.
Okay.
In fact, today itself, we've just announced our CEO for Europe.
So that's the headline that is being broken here on CNBC-TV18. Suzlon appointing a new CEO to look at the European opportunity, the European export market opportunity.
That's correct. So we have also kind of looking at the Southeast Asia market. I think a lot of countries there in Southeast Asia also adopting renewables very fast. Australia is another important market. And Middle East is the other market. So these are the markets that we are looking at. And with the current forecast, we've seen also from GEOAC from India exports, close to about 10% of India has the potential actually to meet 10% of wind energy globally.
Okay, so what could this potentially mean in terms of export revenues, say 5 years on?
Yeah, I think it's
too early.
It's too early to state numbers. But I think the idea is that, as you've known, historically, we've had significant revenue coming from the international markets. And the idea is to rebuild. And in the new world today, where from a product technology and the performance, especially with close to about 6 gigawatts of wind turbines that we have supplied to 17 countries globally, there is a good track record and acceptance, and customers are looking forward to having Suzlon back again.
What about the US? Is that an opportunity at all that you're going to consider, given President Trump doesn't like wind?
Yeah, I think if you see even in the US, I think the growth of wind sector has been good. And in fact, our largest market outside India has been the US historically. So it has very good potential. And I think we are also actively looking at how the trade relations pan out. And from a product and technology, we are geared up to serve the US market also.
Okay. One of the concerns, and it is of course not official, but it has been speculated that the government may look at tweaking policy and allow Chinese companies to participate in government tenders. Now, I understand that as far as renewable energy is concerned, the domestic requirement is already built into the policy, so that offers you protection. But is there any concern on that front?
Not really, because I think today if you see both for wind and solar, the manufacturing capacity that the country has is more than double of what the country is installing annually. So we are reasonably Atmanirbhar as far as wind and solar is considered. And from that point of view, I don't see any challenges in that areas. I think it's more to do with specific sectors where India does not have the capabilities and would need import to kind of meet its
So have you heard anything about that? Is there a plan at this point in time to review and allow the participation of Chinese companies, for instance, in thermal?
I do not have any specifics of that, but I think there's just a general discussion that likely in some components where we are laying back, there could be some permissions that may be granted, but renewables doesn't seem to be the case.
In terms of the current order book and the expectations from here on, as well as the tenders that have been cancelled and the re-tendering process, what's the view on that?
Yeah, so I think today if you see both, if you look at the solar trajectory from now, so it's just crossed about 130 gigawatts, and the target is to reach 300 by 2030. With the kind of projects in pipeline, almost 80 gigawatts of new installations are happening, and the tendering also for 30 gigawatts that's there. So effectively, we have a reasonably good visibility of about 235 gigawatts of solar already today for getting on track. And for wind, if you see, with 54 gigawatts already installed and close to about 30 gigawatts under implementation and about 2-3 gigawatts under tendering. So we already have visibility about 85 gigawatts plus on that. So I think broadly, there is alignment to get to those targets. What's happening right now is that, we've seen the change in we had the planned reduction in ISTS charges, and therefore effectively now the states, we'll see more development within the states.
Okay.
And so interstate relationships from a transmission point of view, the charges will have already kicked in now. So with that, we are seeing that all the 8 states, if you today just for wind, if you combine the total demand that has come up from the state itself, for 2030, it's already 107 gigawatts. So I think there is a natural good demand for that. And India is in a way blessed that the demand curve of India, we see a peak in the morning and peak in the evening.
Yeah.
And we see pre-monsoon peaks. All these 3 peaks, wind actually has a similar weather pattern for India. Morning we see higher winds, evening we see higher winds, pre-monsoon we see higher winds. So there is a good fitment of the wind demand curve of India and the wind generation curve. And therefore today in the new situation, we'll see an energy mix in India where it's going to be hybrid projects.
Right.
Wind, solar, battery together.
So how well positioned are you for this hybrid future?
Yeah, so of course, I think the market has shifted and we too are kind of gearing up ourselves for Suzlon 2.0, where the idea is we would like to move from a pure wind play to a renewable energy solutions company. And already we are working with customers in making their plans in terms of how we can provide a full integrated solutions. What we've seen is also to build up capacity, we are seeing that customers are looking for a full project from us, right from concept to full commissioning and lifetime service. So we are now building a portfolio of projects of FDRE or hybrid projects as you call, from development to installations. The EPC business is something that we are building up in a bigger way. And then we, of course, have a strong service arm. And across all of these, other element that we are putting in is the whole digitization. So leveraging automation, AI, robotics across the value chain. We are kind of making all the processes and systems more smart in a way.
So Suzlon 2.0, as you said, you're ushering yourself into this hybrid future. Is this largely going to be driven by organic opportunities and organic growth? You've already looked at acquisitions recently. You've concluded some recently as well. Or will it also be driven by inorganic opportunities?
So I think in today's world, partnership is the mantra. So I think the way we will be looking at the new wave of, preparing ourselves for the hybrid market is to go both in organic as well as partnership models. And I think also with clienteles now, there is a much long-term planning. I mean, today with some of our utility clients and industrial clients, we are already working on year 3, 4, 5 long-range planning for all of them. So because this project development takes a while. So with the strength that Suzlon has in project development, we are expanding that for full FDRE for the hybrid projects and also on the EPC front. Primarily to ensure that we de-risk, all the elements of construction for the customer. So customer can get in at any point in time, depending upon the risk appetite, either from the beginning, or we could give them almost ready projects to use.
You've clearly charted out a new path as far as Suzlon is concerned in your 31st year, from a wind-only operator to a hybrid player. Lay out for us the milestones that you hope to achieve, for instance, as you usher in this new future over the next 5 years.
Yeah, so effectively, the idea is that, when we look at the whole market, if you look at the segments, so we have the first segment, which is the India Inc. All the Indian large corporates are all charting out their plans for decarbonization. And with that, really, we're working very closely with almost all the large groups to see how we can help them in the 5-year journey. So we're working on developing their long-range planning on that. We are also working closely with the Indian utilities, almost all the private sector utilities, to also chart out their energy mix for the future on that. Likewise, the PSU segment, both at the center and at the state level, are also looking to kind of decarbonize over there. So effectively, the transition which is going to happen now, the idea is that we would like to, gear up to be that partner for anyone who wants to go green, to be the first choice and, kind of have that leadership position in that space.
17 facilities already, 3 more, 2, one in Gujarat, one in Karnataka, and the third one yet to be decided?
Yes, we are yet to just form that up. So I think in the
where are you likely to be?
I think, if you see today, almost all the 8 windy states, starting from Rajasthan, Gujarat, Maharashtra, Andhra Pradesh, MP, Karnataka, Tamil Nadu, almost all the states where we have good windy states, we have presence. So I think the reason these new facilities are also built up, because now the blades, the turbine size blades, I mean the new product that we have, if you see the size of the blade when you kind of install it, the wingspan of that is actually larger than an A380.
Wow.
So these are huge, and therefore you need to be closer to where the windy sites are. So as the wind development is happening across the country, where we have large segments, we kind of getting the factories closer to those plants.
Well, windspans as wingspans, mirroring almost the A380 or larger, in fact, than the A380. And that seems to be the nature of your ambition going forward as well. Mr. Tanti, always a pleasure. Many thanks for joining us here in Davos. And we wish you the very best of luck for 2026 and beyond. And look forward to hearing more from you as you finalize your export plans. We will take a break here, but the conversations will continue. Don't go anywhere. More headliners and newsmakers coming up for you. Right from the World Economic Forum's annual meeting in Davos 2026.
Welcome back. Joining us on the show now is Kishore Runwal. He's CEO at Anmol Jewelers. Mr. Runwal, hi. Thank you so much for joining in. I remember last year we talked about silver prices crossing 1 lakh and then 2 lakhs. And this year, at the beginning itself, and we are still in the month of January, and we've crossed 3 lakh rupees a kg, and we are trading at around $93, $94 an ounce for the international markets as well. How are you looking at silver prices from here on? Because for the recent past, whenever I have spoken to you, the kind of levels that you have given in for silver, we've seen all of that getting achieved.
Thank you, Manisha ji. As of now, if you see exactly from 1 month before, silver has rised by 1 lakh rupees. So 2 lakh was the rate, and today we are seeing somewhere near 3 lakh 2,000 rupees in the Indian markets. It is looking very bullish as of this. The present trend which I am seeing, the patterns of what we have seen from 2 lakh to 3 lakh, it is going the same way. And from here, again, I see a bullish trend from 3 lakh 25,000 to 3 lakh 30,000. I am seeing a volatile market where it may touch 3 lakh 30,000 rupees.
All right, so some more bullishness coming into the market. Mr. Ranwal, also when I look at, and we've been speaking to some silver representatives in the Indian markets today, they tell me that if it is 3 lakh rupees, you could buy silver in the physical markets at a discount right now. MCX prices in the meanwhile are trading at a slightly premium right now. At these 3 lakh plus kind of levels, are there lesser buyers? Is there a lot of availability of silver in the Indian markets? And is the reason we've seen a discount come in?
Due to very high pricing, I think investors as of now presently are very less. There are no big buyers, but if you compare to US and China, there is a premium rate going in the US markets and in China. China, it is getting sold at 10,000 rupees premium, and Indian markets, if you see, it is getting sold at somewhere near 7 to 8,000. That 7 to 8,000, I don't see a very big difference because the demand is little slow. But as prices will shoot up, I am very sure, because always people give an entry at a very high rate. The common man comes at a very high rate. So I see that again this gap will get closed. If we see somewhere silver near 320, 330, we will see a lot of investment coming in India again by the investors.
How are you also looking at the overall demand there? And I mean, as you said, investors are kind of on the sidelines right now. Has silver ETF, silver jewelry buying, silver articles, all of that also taken a bit of a hit?
Definitely, silver article markets has taken a very big hit. The volumes are gone down. We can valuation, if you see, we are touching the turnovers at the same ratio, but volumes have drastically gone down. It is not. It has become silver articles has become now expensive. Now, if you go to a market and buy a glass, it comes near 50,000 rupees, which is very expensive for the common man range. So the common man market is gone. The middle market is gone. Now we have entered the rich segment, the upper rich segment for the silver taste. So the silver article market is down. Silver jewelry market will do better because as gold rises, we will see a very good opportunity for the silver jewelry market. If you see ETFs has done tremendously well in Indian markets. Very good investment have come in ETFs, and compared to last year, if you see the imports in India, it is somewhere near 7,158 compared to 7,669 tons of silver, which was imported in 2024 to 2025. So a similar, in spite of the surge, in spite of that rise in the market, we have done imports very good in silver. If you see in gold was somewhere touching near 812 tons in 2024, and 623 tons has been imported in India this year. So gold is done little low, but silver is done drastically. Imports have done good in India.
Okay, absolutely. Going from strength to strength only, and considering the geopolitical issues, that's the key catalyst for gold and silver prices at this point in time. Manisha, thank you very much for taking us through that conversation. Just wanted to highlight that there is a comment which has come in from Sun Pharma with regards to the news or the reports with regards to the possible acquisition of Organon, which is with an enterprise value of around $10 billion. They have said that as of now, this is speculative in nature and that there is no material event or information that requires disclosure. So that's the comment coming in from Sun Pharma at this point in time. We'll take a short break. More on the markets once we're back. Stay tuned.
Welcome back. We've seen some more fall from the highs of the day. The metal index has turned into the red. So let's try and understand what's the F&O setup looking like. Manglam is joining in now. Manglam?
Well, the market is lower and the levels don't suggest that we're oversold yet, just the way we were, same time last Monday. But having said that, there's no taking away from the fact that, the heavyweight indices are being impacted by the earnings. So if you look at, ICICI Bank, Reliance and Wipro, all of them are the top 3 contributors to the Nifty on the downside. The Nifty is down almost 200 points, 190 points to be precise. If you look at the points with which Reliance is dragging the frontline index, along with ICICI Bank, add Wipro to that, that will account for the entire decline. What's actually worrying right now is the mid-cap index, where the market breadth is still in favor of over 2,100 stocks, which are in the red, for about 750, which are in the green. And those two lines don't look like they are coming closer. So that's something that we need to monitor as we go along. The other thing that we need to monitor, and that perhaps could prove as a bit of a silver lining, is that, today's low on the Nifty, 25,494, it's a good 20 points above the low that we saw on Jan 12th, which was 25,473. Thereafter, we saw a big bounce from those levels. So till such time that panic low is maintained, it'll be important for the market to consolidate and buy time around these levels. The other thing that I'll be monitoring very closely is whether the Nifty goes ahead and actually towards closing crosses past that 100-day moving average of 25,570. Why do I say that? Because the Nifty hasn't closed below that level in a while, and breaking below the panic low on Monday, the previous Monday, and staying below the 100-day moving average opens the door to the 200-day moving average, and that would be a bigger fall from current levels. But that may not happen so long as the Nifty Bank is holding on to the 20-day moving average and the 50-day moving average. So the Nifty Bank, a large component of the weight on the Nifty, will obviously see some support at the 20 and the 50-day moving averages. So those are important levels to track. The put-call ratio is at 0.7. Again, lower end of the range, but nothing to suggest that there is panic or oversold market. So what is it that the option writers are doing? They're writing the 25,600 call and the 25,500 put. Put together, what this means is that they are looking at a Nifty range between 25,450 to around 25,650. So this 200-point band is where the market is likely to buy in time in the near future.
Okay, Mangalam, thank you so much for that. We'll keep an eye out on all these cues in the world of F&O. But also BHEL, that's trading at the day's low, down 3% after its Q3 FY26 numbers. On that note, we're going to slip into a very short break. We'll get you more on the markets and stock-specific action on the other side.
Welcome back. Well, it is a sea of red today on the markets. We have the Nifty, which is currently 143 points lower. We have the Bank Nifty, which is down around 0.4% as well. And the mid-caps, which are step in step in terms of the Nifty and the Sensex losses that we're seeing, with the mid-cap index down around 0.5%. The advance decline ratio on the declining side, around 1,200 stocks advancing to over 3,000 stocks declining. That's the setup at this point in time. It's a wrap from all of us on Halftime Report. Business Lunch takes all the action forward.